TheoTrade. This is Don Kaufman. August 31st, 2020. 10 minutes to go to the closing bell with the S&Ps up some 650. The Nasdaq absolutely on fire once again. But the real story for today's trade, you got the market up and volatility up. Now, this has been several trading days in a row. But let me actually explain precisely what we're seeing. And more importantly, what you as a trader can possibly take advantage of this kind of phenomenon with, once again, you got the marketplace, blistering pace to the upside, specifically inside of the Nasdaq, feels just unstoppable. That redefines a parabolic move to the upside. But at the exact same time, you're seeing volatility not just move up, substantial moves up inside of volatility. Let's actually get to work and explain a little bit on this evening's video, and again, more appropriately, how you can actually take advantage of this. One of the things that I want to bring to your attention right up front, if you take a look at the SPX from last week, today, obviously the SPX, it was involved in kind of a blistering move to the upside last week, but today, for the most part, massively unchanged. I mean, listen, you start looking at the advanced decline line, you start looking around the marketplace, people, this is the Nasdaq, and that is it. There is sell-side activity through and through. Take a look at the financials, sell-side activity. Take a look at the energy sector, sell-side activity. We can go all day, people. Want to take a look at something like Walmart and consumer staples? Although it's off the lows of the day, sell-side activity. We start looking at the advanced decline line. This is the Nasdaq 100 advanced decline line, which ironically is a 50-50 shot. Now think about that for a second. The first advanced decline line that I brought up, which is an unusual one, happens to be none other than the Nasdaq. Why? Because the Nasdaq's up right now, again, 160 points, right? The divergence just continues to grow. But if you took a look over at the S&P 100 advanced decline line, a little bit of a slop fest, but net, you're trading to the downside. Most of the sectors are also to the downside. Push all of that aside. Like, tell me something I don't know, Don, right? There's a huge divergence underway. Well, here's the aspect that I think that really resonates with me. No, not necessarily Walmart. Let's go ahead and initially pull up the spiders. The spiders seeing, again, a fairly gradual move to the upside, followed by, of course, last week's explosion to the upside. But at the exact same time, let's actually pop in. This is an implied volatility range. So what you're actually looking at here is the IV rank. Again, the IV rank. And of course, you can see the IV rank down below here picking up to the upside. Maybe more appropriately, we'll also take a look at the QQQ. So inside of the Nasdaq 100, again, you've got the market ripping to the upside. You've got implied volatility taking off to the upside. And we can continue. Take a look right here. The financials. Here's one of the most interesting things about this marketplace. The financials. Oh, but Don, that's not going to the upside. You're exactly right. In the last two trading sessions, the financials have been down. What have their volatility done? Absolutely nothing. So right now we have a marketplace, and I'm actually going to take this into a bit more detail. We have a marketplace right now that's only reacting with volatility going up, with a marketplace that's just on fire. And yet we have a sector that's actually taking a little bit of a hit, all right? And its implied volatility is doing absolutely nothing. Let's actually compare that to the IWM, okay, the Russell, which is also seeing a little bit of sell-side activity. Lo and behold, the Russell actually is seeing some volatility pop to the upside, but I have a little bit more of this phenomenon for you. Take a look at this, Apple. So we're split adjusted now, 4-for-1 split is in. Apple's volatility is absolutely exploding, but right next to it happens to be none other than Microsoft. Again, Microsoft taking off to the upside, except for today it's down almost 1% and its volatility dropped with it. Now think about that. Everything you've ever learned about the markets and options is completely inverse over here. Okay, and this is something you need to go after. Okay, and when I say you got to go after it, this is something you got to trade, and we're positioned effectively for that type of trade. So what are we thinking of doing? Again, push everything aside you see in the marketplace. Listen, I know bonds today have been Mr. Toad's wild ride. Look at the bonds on your own. Look at intraday on the bonds. There was some Fed speak. They're all over the place. I realize the dollar has actually cracked into new low territory. Okay, you got to go back on a multiple year chart to see that. Doesn't matter. What you got to trade is right in front of you, and most people are actually missing it. The phenomenon that we're actually seeing in volatility right now, okay, it unto itself can be extraordinarily profitable. Because what you're getting here is stocks that are actually capable of moving up with volatility actually going up, which is an expansion of volatility with the product going up. Okay, I mean, it's like utopia for a trader. So what are we going to use? We're actually going to use buy-side iron condors, and we've continued to use buy-side iron condors, what they call gamma iron condors. What is, okay, the gamma iron condor? And I'll give you a quick example of it here inside of the spiders. So the spiders have actually taken off to the upside. So what's my risk out there in going out to buy an iron condor inside of the spiders? If the market continues on this blistering pace to the upside, maybe volatility continue to go up. Any volatility going up inside of the spiders, of course, is going to be beneficial to me. And if the marketplace turns around and absolutely tanks, okay, believe me, volatility will also go up. Okay, so it's a buy side, again, a buy side iron condor. The bottom line right now, right, is that you want to be a premium buyer. That's the big takeaway from over here. You want to be a premium buyer. You can look at the break-even points of a trade like this all day long. It's not going to make a difference. If we explode to the upside, we're seeing volatility go up, but the market go up. We take off to the downside, it's also probably going to be positive volatility. Okay, how can you go wrong? Well, you have to know the really definitive criteria. You got to look at the gamma iron criteria. You got to know what expiration. You got to know the right IV rank. Okay, it's all about, again, IV rank, and I'll show you exactly what I mean in here when I talk about like IV rank. Take a look. Somebody asked me, hey, where should I do one of these, gamma irons, buy-side irons, maybe in the spiders. Look at their IV rank. It's about 22%. 22% IV rank. And you go, why not do it in the QQQ? You just mentioned a second ago, the QQQ. This place was exploding. Yeah, the QQQ. I already had my trades on in there. They're already off profitably. Look, its IV rank is what? It's relatively high. Maybe you look at something like Apple. IV rank is flying already because the volatility is picking up. So what you have to do, you have to be extraordinarily selective. You got to go in where the IV rank is slightly lower relative, okay, to the remainder of the marketplace. I'm telling you, right now, you got the market going up, you got volatility going up, okay? I mean, the marketplace as a whole, you talk about divergences and so forth, you couldn't throw off any more, warning signals for the marketplace. But right now, not knowing if this marketplace continues to explode to the upside or turns and tanks, be a buyer of premium. Why? Because then the market's handing it to you on a silver platter. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.